So this video is specifically on the biggest corporate scandals. So I'm sure we've heard of Enron, Worldcom, Parmalat, and also the Maxwell Empire, and many more. There's also Wirecard and many other. But in this video, we just want to focus on these four. So we'll begin first with Enron, and then we'll follow that same order that you're seeing on the screen, and then we'll talk about the major issues such as auditing issues, accounting issues, even governance issues. We'll also summarize something on that. And basically, the most important one, which actually brought them out as scandals, fraud issues. So we'll actually look at all that in each and every case, that is Enron, WorldCom, Parmalat, and Maxo. So let's begin with Enron. So for the Enron case now, what are the major issues here? So Enron, if we start with the governance aspect, it was noted that the CEO and chairperson were just the same person. Okay, this is one governance issue that, according to the UK code, as a defense, maybe you can defend this. According to the UK code, is that no one person must not have unfettered powers. So that was one governance issue that was noted in Enron, and also when we look at even the NEDs, they were not effective because they were not there to scrutinize. And that's one role of the NED. All NEDs should be able to scrutinize the board and its strategic plans and the like. So all those were also other governance issues there. So that was one thing that was also noted. So now, when you look at the accounting issues that were noted in Enron, there's one major one that they will call mark-to-mark accounting. Yeah, basically what was happening here is that let's say an asset was bought at a certain historical value today. Then what they would do is they would forecast the cash flows and value it at a future date, and then they would be able to get the difference between the valuations, the historical one, and that future valuation, and then they will record that difference as the current profit and reflect that in their financial statement. So that's actually cooking the books. We would put in another term we can put as an accounting issue. So they were cooking the books as well by reflecting profits when they actually did not have money, so that they could just deceive investors and keep them going and get borrowings. So now this is one major thing that was picked out from the accounting issues of Enron, and that mark-to-market account, the famous mark-to-market or mark-to-market accounting there. Then the other issues that also arise in Enron, audit issues, just to summarize something, the audit issues for Enron were that they had a certain audit company named Arthur Anderson. Yeah. And some audit issues that were picked were that these same auditors did both audit and non-audit services. These two things. This is not wrong, no, entirely, but it proved as an audit issue. Why? So when Arthur Anderson picks out a problem, they never said anything about it. The reason is that they feared they would lose that lucrative earning that they're getting from the non-audit services, because it was noted that they were earning more from the non-audit services. So them trying to maybe inform management about the issues they're finding, they feared that, and that reduced their objectivity. So that became an audit issue in its own way, because an audit is supposed to be objective and not let these non-audit services now begin to make your judgment bias. And also another thing that they did, they shredded documents, destruction of evidence. That was also wrong, because it's like they were covering up, like we earlier mentioned. They did not want to disappoint management, so there was that fear. There was that fear as well, intimidation threat, we would say there. So they also shredded evidence, which is not, again, something that auditors ought to do. Yeah, so that's another thing that we can also add on the audit issues. And when we look at the fraud, the fraud issues were quite a number. Let's just try to summarize some. Here, there was one thing they called the Valhalla scandal. there was a certain scandal that brought about just fraud indicators that they were using their fake accounts that they would call. Let me just write some details. So we talked about the Valhalla scandal. They made fake accounts like the MYAS accounts. That's what was noted. These were fake accounts that they were using for fraud, and yeah, that's one fraud issue. Another thing is that they always met shareholder expectations. This is actually a red flag or an indicator of fraud, because management always wants to, be in good books with the shareholders. So that was another thing that was noted, and that can be an indicator of fraud. It can be a fraud issue as well. So always meeting shareholder expectations. I would say shareholder expectations. Just abbreviate that. Yeah. Then the other one is they used to give themselves huge bonuses. All these are fraud indicators, because large sums of money could also actually be questionable. Yeah. And then there was also there was a firm called LJM, a fraudulent firm that they also used as well to commit fraud. LJM firm. And another thing is that the CEO resigned. All these are possible. All these are red flags, I would just say there. Yeah. And another thing that was also noted, special purpose entities. Those two are indicators of fraud, because you are covering something, debts, not giving the true picture of your financial position, and having entities out there that you're basically transferring all your debt and credit, and so that you can have a good picture there. Basically they were using those entities to borrow money for Enron. Yeah, that's what they were doing in actual sense. And then one thing that was also noted is there was some irregularity in the stock price. It was initially $70. Then again, during the year, it reached $90. After 90, it went to $80, and then drastically below one. So these were indicators that there could be something going on in the company. So all these were fraud indicators, fraud issues that were also found in the Enron case. And basically, this just gives you an overview of what was going on in Enron. So in summary, basically, this was the Enron scandal. Many things were talked about in Enron, but these were the key features that stood out in the Enron case and scandal. So we'll now turn to the next case or scandal, I would say. This is the Worldcom scandal. So just a brief overview. Worldcom is a US telecommunications company. At the time was valued at $1 billion. Yeah. So they even said that later in 1998, they merged with MCI, and they were now called MCI Worldcom. So now things started changing. Yeah, the stock price dropped in the telecommunications industry drastically, from somewhere roughly approximately $62 to about 18. So all those things began to affect the earnings report of Worldcom. So now what issues started arising now from there? So what they began to do is they intentionally, let's take note of this, and this is supposed to be a fraud issue here. They intentionally misstated the figures, changed what was written, just to keep painting that good picture. So they intentionally changed figures, and they used to do this quarterly, just like that, so that they could at least paint that good picture. Another thing that they did, which is also an accounting issue, is that so the costs or the expenses that were incurred in renting the cell and landline infrastructures, they would classify them as assets. So this was an accounting issue, because according to certain standards, you cannot start capitalizing expenses such as rent. No. So that's what they did. What they also did is that even the rental amount that they would pay, they managed to break it down to be paying it for over a 10-year period and classified it in the balance sheet there as a prepayment. So all these things were cooking the books, basically, we would put in that accounting issue as well. So even this one had cooking of the books or accounts, yes, by all those reasons that we've just stated. So another thing, back on the fraud issues, the bank also began to demand $3.8 billion of fraudulent entries. So that was again another indicator of fraud that was being seen. And also, investors collectively lost $30 billion. That was a red flag. That money equally just being lost just like that. And it was even determined at the end when they were discovered that there was about $11 billion of fraud. That's why it's also among the biggest fraudulent scandals, Worldcom, because $11 billion was a substantial amount of money as well. Yeah, under the fraud aspect. So even when it comes back to the governance issues, we have the same thing as well. So one thing that stood out commonly amongst all these scandals is that under the governance aspect, the CEO was also the chairperson. So in that case, there was unfettered powers. And according to good corporate governance practice, that is not acceptable. So this was also seen. Benny Evans, the CEO here in Worldcom, was the CEO, also the chairperson of Worldcom. So he had all that power to do all that. And again, having too much power can also create opportunities to fraud. When you look at the fraud triangle as well, if we look at it in that wide variety, so you can see that in each case discussed here, there are fraud issues, there are governance issues, there are also accounting issues, as you can see. So there are many issues that would pop up. As we said, this is just a summary video that's highlighting some key aspects, at least to just give you an overview of what was going on under each scandal and what led to their downfall. Yeah. And also, if we look at one more thing that really stood out under Worldcom is that there was a failure or lack of courage. So let me just put face the governance issue, CEO being the chairperson as well. And then we wanted to see that the one major issue that stood out here is that there was a lack of courage to blow the whistle. So basically, you can maybe even support this by saying that that was in 2002 when the Sarbanes-Oxley Act was enacted. Mainly, it was there to also create protection for whistleblowers. So maybe that could also be a defense or literature to use there. That's the lack of courage to blow the whistle. So this was also seen under Worldcom. And most of the auditors here at Anderson as well, they were basically conspiring with them. So auditors could not pick out the fraud aspect. Of course, it's not the job of auditors to detect fraud, but they can report it if they see it. But this was not seen even in the Enron case. They never said anything. At Anderson, they are the auditors of Enron. They never said anything, and these were things that we can also note and at least maybe bring out as well there. So that's the point. So watch out for part 2, which is now going to continue on these biggest corporate scandals, that is Parmalat and Maxwell.